how this financial modeling is going to help to all the participants, right? So let me just start with my PPT. So I can share my PPT, right?
Yes, you can start.
Okay. Yes. I hope the PPT is visible to all of you.
Yes, it is visible.
Visible. Great. Okay. So in Edudesk, we are now launching one 3 months course on financial modeling and valuation. Okay. And the course will be basically undertaken through online session only. So we will be just trying to cover all the important aspect of the financial modeling during our weekend sessions, right? So this is how we have planned for all the participants, those who are really keen to join on the financial modeling and valuation course, right? Now about the Edudesk, you people have already understood how Edudesk is basically trying to create a gap between whatever the academics that you have learned during your MBA and BBA and how the same can be connected in the practical corporate world so that you can use those academics and try to come to a pace where you can really work with the corporate world using those knowledges, right? So that is where the primary focus of Edudesk to bring all those kind of professionals to this level, right? Now, first of all, before I get into the financial model, I just want to make one voice to all of you that if you really want to break into your career in the investment banking or be it equity research or corporate finance, there is one skill set that is required and that separates with the average candidates from high value professional, and that is what is called financial modeling, right? So today I will show you not just what financial modeling is, but how it shapes your career in the capital market and in the hardcore finance domain, right? So let us look into what basically talks about in the financial modeling course. I'm just trying to take over like what is this financial modeling program, okay, and what are the modules that we are going to cover in this financial modeling and valuations. After I cover the modules, then I will just try to speak about the career opportunities that is available for you, all of you, those who are going to join these courses, whether it's in the like equity research domain or it's in the hardcore finance domain, right? And after completion of your participation or after completion of your course, you will be awarded with one certificate of participation. And finally, if you want really keen on joining these courses, you can just contact with the concerned person who is basically helping you to join the course, right? Now, before I start into the financial modeling, I just want to like make all of you understand that when we are talking about financial model, right? What financial model basically tries to help you? Anybody? What do you understand with financial modeling and valuation? Sudhanshu, they can unmute themselves, right? Sudhanshu?
I don't think so. Let me check.
Okay, just check that if anybody wants to I just want to have a fair understanding that what exactly you mean with financial modeling.
Yes, they can unmute themselves.
Yes. So anybody who wants to contribute?
Or you can write your answer in the chat box also.
Okay, fine. No issues. Okay. So financial modeling basically is the process of building a structured representation of company's financial performance, right? Whenever we are using financial model, we basically try to structure the whole financial statement into a model which help us in doing lot of quantitative analysis, right? In this corporate world, if you see globally, every finance professional basically try to use financial model using Excel, okay, in order to do lot of analysis. So when I say lot of analysis, analysis in terms of the company's business performance, analysis of the company's each of the segment, how each of the segments are basically performing in the total business of the business company. So this is something which we basically try to do in the financial model, right? So it is one of the most fundamental and widely sought after skill in the finance industry, which helps to perform quantitative analysis, right? So in finance domain, it is basically called as the art of building a model using MS Excel. to depict the financial statement and to analyze their investment decisions. Whenever any company is making any investment decisions, how do you measure their performance? By putting those financial number in a financial model and by analyzing them, whether those parameters are working based on the projections of the company or not. This is something basically we try to understand when you call it as a financial model. So financial model basically essentially can be used not only in the capital market. I am a finance professional. Okay, I have worked around 8 to 10 years in the equity research industry. Now I am working in the finance domain. So when I'm talking about the finance domain, I basically try to help a lot of startup companies, MSME companies to structure their business performance. So in that kind of scenario also, I try to use financial model to measure the performance of their business. Right? So that is where is the core of the financial model. Right? So financial model basically try to help you to measure the performance, and also if you want to do a value of the business, if you want to do a value of the business, financial model can help you to do those valuation. Because in valuation, when I'm talking about valuation, there are various valuation methodologies are there. As Sudhanshu has already explained about my core expertise, I have worked in various kind of valuations, be it a DCF valuation, be it a asset-based valuation, or a market approach. So we try to use all those valuation methodologies to derive that considering the current performance of the business and how the company is going to be performing over a period of time. So when I say over a period of time, maybe 1 to 3 years or 1 to 5 years down the line, using those parameters, if you have to value the business, how will you value, right? So this is what something can be done when you have to make a detailed financial model for any company, right? So in the financial model, if you just try to see, basically we try to divide the whole financial model into various parts. Okay, into various parts. So essentially, if you try to see, any financial model will have three important statements, right? Three important statements. Which are those statements? We basically called as the income statement or a profit and loss account. We have a balance sheet and we have a cash flow statement, right? Whereas income statement try to talks about the financial performance of the business. The balance sheet basically talks about the financial health of the business, and the cash flow statement basically try to talk about the financial liquidity of the business. Okay, so these three statements are most important statement where you try to measure the performance of any company. Right? So this is what is the essence of the financial model. Now, as I discussed that, there are various components in the financial model. So three statement, which I've already talked about. In addition to that, three statement basically talks about the historical performance of the business. But that is not something which is there in the financial model. The most important part of the financial model is forecasting. How do you do forecasting? Because I told you for the purpose of valuation, we need to do a proper forecasting of the business. Right? So you basically try to see there are probably a couple of sheets called an assumption sheet where you have all your growth drivers, right from revenue to till all the cost and also your balance sheet items. Right? So assumption sheets basically try to cover all your assumptions that you have considered for the purpose of making the detailed forecasting of the business, right? Then you will have lot of schedules. What are those schedules? When you have to look at your profit and loss account, we starts with revenue, then we come to the cost, and after we come to the cost, there are a couple of important schedules that you have to keep it in mind, and that is what is basically we call as a depreciation, interest, and taxation from the profit and loss account point of view. Similarly, when you have to look at the balance sheet, right? We also prepare a couple of schedules. What are those schedules? Basically, working capital. Working capital is the most important part of the business because without working capital, you will not be able to derive whatever the revenue and cost. So working capital assumption has to be considered while preparing your forecasted balance sheet. Debt schedule. Why debt schedule is important? Because if you are looking at any company which has a debt in the books, so when I'm talking about the debt in the books, it may have a lot of long-term loans in the nature of debentures, right? Term loan from the banks and all. So all these loans has to be repaid over a period of time. and there is a interest commitment also attached with the loan. So when you have to project your future debt, how much debt will be there at the end of each of the projected financial year, how will you calculate? You need to prepare one schedule which basically try to show you every year if there are any repayments that is happening, it should be reduced from my closing balances. Every year you have to pay interest. How will you calculate that interest? Those things, something which will try to make you understand in the financial model, right? After you prepare your forecasting, your output is what? Output is you have to basically try to derive what is the value of the business, right? What should be the value? If these are my forecasting parameters, right? If I have to consider, then using that forecasting parameter, what should be the value of the business, right? This is something which we generally try to identify by looking at the output sheet. In addition to that, there are a couple of other important analysis which we try to do it. For example, ratios. Ratios basically try to help you to measure the performance of the business. Correct? No? Because when you are looking at any particular number, you will not be able to analyze what will be the performance of the business. Ratios basically try to convert those number into the percentage format to see every year whether the company has progressed well or not, right? So ratios are one of the important factors which we generally try to put it in the financial model. So whenever I have to prepare my financial model, if you try to see the structure of my model, it always starts with my three financial statement. Then I'll have one assumption sheet. I will have lot of schedules, right? And finally, I will have my output as well as my ratio analysis. This makes a complete and a comprehensive financial model, which you will be learning in this course, right? Okay. Now, the whole course module, if you have to try to see, is essentially divided into various modules. Okay, it is essentially divided into various modules. If you try to look at that modules, we have tried to connect it from the basics to tell the valuation. Okay, if somebody has to prepare a financial model, he or she should be very clear on the fundamental concept, what we generally try to use in the financial model. Okay, so we'll just try to first make you to understand that how do you interpret the financial numbers, how do you measure the performance, how do you set up the forecast, and at the end, how do you derive the value of the business, right? This is something which we will teaching to you, all of you, or including that, we will also be taking up a lot of live case studies. So when I'm talking about the live case studies, I will be sharing a lot of financial model exercise to all of you so that practically you will try to understand that how do you derive those numbers. Okay. In addition to the case studies and all, we will also be giving you a lot of case studies like in the nature of, you can see that some kind of readings will be there, some presentations which we are going to give it, which will again help you to try to connect with the financial model. Okay. So this is something which you have kept in the whole module. Now, let me run through each of those modules. Okay. Starting with your first module, as I have already explained to all of you, that in order for you to prepare the financial model, you should have minimum Excel skill set, basics and advanced. Okay. If you are thorough with the basics also, we will be try to help you to reach to an advanced level. Okay, so we basically assume that those who are going to join this course has a minimum basic Excel skill set, right? So you would have already gone through with it in your academics also, how to like work in an Excel. So basically, some of the formulas or some of the functions which we'll try to teach you, because those functions are very, very important when we basically make a financial model. Okay, so we'll run through your Excel skill set. We will give you some kind of handouts where you can use those kind of shortcut keys and all, and some functions to write those formulas, right? So your first module will be basically on the Excel skill set, correct? Then your module number two. We all know that whenever we have to prepare the financial model, it should have lot of accounting numbers, right? Now, how do you interpret those accounting numbers? That is something very, very important for all of you. Okay. If you do not have a thorough knowledge on the accounting, how will you analyze? How will you interpret? Very, very difficult, right? So we will try to tell you how to read any particular accounting whether it's a revenue item or it's a cost item, whether it's an asset or it's a liability, we will try to make you understand so that when you're looking at a financial statement of any company, you should be able to understand what each and every number talks about in the financial statement. When you're reading at those numbers and all, you should know how to interpret those numbers. Correct. No. So we will just try to brush up with a lot of accounting conventions and concepts. Okay. The concept of your separate legal entity. What is trial balance? Right? What is trial balance and how the trial balance is basically prepared? From trial balance, we will move on to your profit and loss account, balance sheet, cash flow statement. Right? So this is something which will be covering in your basic accounting knowledge in the module number 2. Right? Then I have also mentioned that consolidated financial statement. Okay, how do you prepare consolidated financial statement? Now, all of you should be aware that any company, under what circumstance, under what scenario, you basically prepare the consolidated financial statement. Whenever any company is having a acquisition or a control on any other company with 50% or more, in that case, the company who is controlling 50% or more, they have to prepare two financial statement. What is that? One is called your standalone financial statement. The other one is called your consolidated financial statement. Right? So we will help you in understanding what exactly is the consolidated financial statement, how it is being prepared, and what are the key important terminologies that is being used in the consolidated financial statement. Then comes the concept of minority interest. The concept of minority interest. What do you mean by minority interest? How it is being shown in your consolidated financial statement, and how minority interest is calculated in the financial statement, right? Then the concept of goodwill. How goodwill arises in the books of account? Can goodwill be created in-house? Can it be created in-house? Answer is
No.
no. Yes. Okay, goodwill is only and only on account of acquisition. So whenever you are referring at a consolidated financial statement, you will always try to see in your profit and loss account after PAT, after profit after tax, there will be one line that is called as a minority interest. Similarly, in the balance sheet side, on the asset side, you will try to see there is a goodwill. Okay, how it has been calculated, that also we will try to make you understand so that in future when you have to join any company, right? Or during the course of interview, if somebody asks you what exactly is minority interest, what is goodwill, you should be able to demonstrate. See, all of you have to understand that you people have just going to finish your MBA or BBA and you are just going to start your career. So whenever you are going to face any interview in any company, the interviewer always assume that you are a fresher. They will always try to check your fundamental concept on this accounting terminology. When somebody is asking minority interest, you should be able to demonstrate. You need not have to give too much of technical answer. It is not required because I do take a lot of interviews for my freshers and all. I always try to test whether they understand those accounting words or not and how it is being calculated. Okay. So that is something which we'll be discussing in your module number, right? Now, after you got a handful of experience on the accounting knowledge, then let's get into the module number 3, that is called your ratio analysis. Because once you have got the accounting knowledge, you understood how to read the data in the financial statement, right? So what you try to do in the financial model, if somebody asks you, can you make one financial model? How do you start it? You first try to get their financial statement, preferably last 3 to 4 years of data. You try to download from their company's portal, right? Try to put it in the model, income statement, balance sheet, cash flow, right? Just try to put it there. Then what is the next thing before forecasting? Before forecasting, the important thing is you have to first try to analyze how those numbers have behaved over a period of time. Say, suppose last 4 year data you have taken, revenue going up, down, or it is consistently going up or consistently going down. How do you measure? By looking at a number, nobody can analyze that. But when you try to convert that into various ratios, for example, profitability ratio, right? Profitability ratio. We try to see what is the profitability ratio of the company, activity ratio, balance sheet ratios, liquidity ratios, return ratios. All those ratios will help you to understand about the nerve of the business. Because if you are not clear on the performance of the company, how are you going to do the forecasting? Can you do the forecasting? You cannot. To start the forecasting, it is very, very important for all of you to first put the number in the model, do some kind of ratio analysis, then try to see how the company has performed over a period of time. That will help me to set up the forecast in future, right? So ratio analysis will basically try to help you to measure the financial performance of the business, right? So various kind of ratios are there. But what it is important for you at this point in time, we'll just try to run through with those kind of ratios. Correct. So ratios will be a dedicated module for all of you. We will give you some kind of a case studies, some exercise to all of you, and we'll try to measure the performance. Correct. See, always remember that in the ratios, you need not have to remember the formulas. Formulae, nobody's asking. Practically, I'm telling you, based on my experience working with various security research companies, if you try to go and join any company, no, they have a standard templates. Even the financial model also, there is a standard template is there. In that, you will see that there will be a section called ratios. There, everything will be written there. Profitability ratio, margin ratio will be there, including the formulas. So nobody asks you to remember the formula. If you have to really understand what is ratio, try to understand and interpret each and every ratios. What is EBITDA margin talks about? What does it mean? What is leverage? Right? What is leverage? What is debtor turnover ratios, creditor turnover ratio? What basically tries to tell you that is something the company wants from you people. Okay, rather than mugging up the formula and writing. That is not going to see. Today we are in the world of that AI, right? Everything, every question, if you just put it, you are getting answer. You just write it, what is the formula for this growth ratio? In seconds, you will get the answer. Right? Everybody does that. So here nobody is asking you to remember the formulas. The most important here is how do you interpret those ratios? Interpretation of ratio is the most important part, which we'll try to run through it. Okay, under your module number 3. Then once your ratios are clear, once you're clear on your ratios, then let us start your forecasting. Forecasting comes just after completion of your ratios. Now, forecasting is one of the crucial area in your financial model. Why it is crucial? As I very clearly told you, the forecasting only tries to give you what is the value. Value not have to be calculated by looking at the historical numbers. Value is futuristic. When I say futuristic means based on my forecasted numbers, right? So in the forecasting section, we will have a lot of session on forecasting specifically, where we'll try to run how do you forecast each and every line item of your P&L balance sheet, right? Profit and loss account and balance sheet, but not cash flow statement. Why? Do we have to forecast cash flow statement numbers? Answer is no. Forecasting has to be done only for your profit and loss account and balance sheet. The reason why we are not using any assumption in the cash flow statement is very simple. Cash flow statement is nothing but the outcome of your P&L and balance sheet. Whatever you have forecasted in profit and loss account, balance sheet, the outcome basically goes to my cash flow statement. Correct? So we will just try to help you how to forecast every line item right from your revenue. Revenue is one of the most important in your forecasting, because every business, if there is no revenue, there is no profitability. You will hardly see any assets and liabilities. So revenue is one of the most important and critical part of your forecasting in the financial model. Okay, so revenue forecasting, then cost forecasting, then how to forecast my depreciation, how to forecast my interest, how do you compute your taxation. Well, we will try to teach you in your forecasting profit and loss account, right? Once you have finished your P&L forecasting, then comes your balance sheet. As I've already explained, in balance sheet, we all know that balance sheet comprises of four important elements. What are those elements? Non-current assets, current assets, non-current liability, current liability, and finally one more which is called your capital, right? So we will try to help you in understanding how do you do forecasting for your fixed assets under non-current assets, current liability, non-current liability. Okay, each and every line item we will try to explain you so that you understand how do we do the forecasting of balance sheet line items. Correct. Finally, with this profit and loss account and balance sheet, we will try to prepare a detailed cash flow statement. How do you do the cash flow statement, right? So this is something which we are going to cover in your forecasting. So once your forecasting is done, then comes what? Final output. What is that final output? Valuation. Valuation in a financial model is the, again, second important after you finish your financial forecasting, right? Valuation is the second most important part of your financial model. Now, under valuation, we will again try to educate all of you that how do you do a valuation of a business. Valuation again is basically divided into two important parts, right? One is which is basically doing a valuation by looking at the cash flow of the business. Valuation, which we have to do it by looking at the cash flow of the business. Then the second approach is basically called as a market approach. Okay, market approach. Now, what is this market approach? We all understand that doing a valuation by just looking at a company's free cash flow cannot give you a fair value of the business. It cannot give you the fair value of the business. We also have to look the other companies, those who are in existence, right, having the same capital structure as about the company which you are doing the valuation, how that company is performing, right? So we have to consider at least some 5 to 10 companies, those who are into the similar business activity, and how do they do their valuations. We have to basically consider their financial parameter, try to create one average median. That median basically we try to link with the financials of this company to derive a fair value of the business. Okay, various methodologies are there. If you look at under your free cash flow methodology, which we generally called as an absolute methodology, under your absolute methodology, you will see that there are various methodologies. I have used personally discounted cash flow methodology, which is one of the important part of your absolute cash methodology. There is one more methodology under absolute methodology, which we call as a dividend discount model. Okay, you consider those companies which is very, very sensitive to their dividend. So when I say which is very sensitive to dividend means what? The price of those companies are very sensitive to whatever the dividend that the company is declaring, right? In those kind of scenarios, we try to apply dividend discount model. Otherwise, most of the time you will try to see that companies use discounted cash flow methodology. Now, if you have to calculate value under discounted cash flow methodology, how do you start it? What are the parameters that needs to be considered to arrive at those value? That is something which will try to help you. There are various steps that are involved under DCF. So when we'll start this session, then I will explain each and every step so that it will be just there in your mind. So whenever you have to do any kind of DCF, you can easily start from the scratch and reach to a final value under discounted cash flow methodology. Similarly, like market approach, which I told you, which we generally called as a relative valuation methodology. Okay, it's a relative valuation methodology. What itself says, no, relative means related to other companies. Correct? Related to other companies. When the other companies, those who are into the similar sector, you consider those financials. As I have already explained that, take their median average and apply that median average on the company's financial. For example, EV EBITDA. One of the multiple which I'm talking about under the relative valuation is called EV to EBITDA. Now, when I say EV to EBITDA, EV is what? Enterprise value to EBITDA, right? I take that EV to EBITDA of those 5 to 10 companies. I try to make an average. I take that average and apply on the EBITDA of this particular company, which you are doing the valuation. That will give you the realistic value of the business rather than looking at a free cash flow and deriving at a value. See, I have done like more than 100 models when I was working with equity research companies. And every model of me, if you'll try to see, valuation I will make not only with the DCF, I will apply DCF. At the same time, I will also apply the relative valuation methodology. Right? So both the methodologies that you need to first understand how that methodology works it, then how I can apply. Okay, how I can apply those methodologies to derive, because under relative valuation also, if you try to see, there are different sectors. All of you are aware that no, we have into the consumer sector, we have a pharma sector, we have a banking, we have a insurance, we have a automobile, we have a oil and gas. So all different sectors are there. Can you apply those relative valuation method equally with every sector? Answer is no. Under relative valuation methodology, there are some sector specific multiples. We generally call it as sector specific multiple. So every sector, if you try to see, analysts basically try to use some specific. For example, in the consumer industry, I worked for 8 years. In the consumer industry, I used to apply EV to EBITDA, EV to sales, EV to EBIT, right? So where you will apply which multiple is something which you will try to tell you when you are looking at a valuation methodology, right? So valuation methodology will be again a detailed exercise with case studies, with practical case studies, so that at least you should be able to calculate the DCF, you should be able to calculate the relative valuation and try to derive the value of the business. Understood? For module number 5, right? Then, other than these modules, whatever I have talked about, we will try to run through a detailed financial model of one manufacturing company, one service or IT company. Why? Because the financial model of manufacturing companies are totally different from service companies. So when I talk about different, different in terms of their financial statement, different in terms of their assumptions, their forecastings and valuation, right? Every sector has a specific model structure, right? So we will try to run through one model of a manufacturing company right from the beginning to till the valuation, right? Right from the beginning to till the valuation, one manufacturing company, one service company, so that at least you should be able to understand how should I start the model and how should I end it up, right? Then we will try to help you in writing various kind of reports. Now, what are those reports? If you people are keen to start your career in the capital market or equity research, lot of time it happens that when you are working for those organizations, you have to give recommendations. You have to give recommendations. Recommendation of what? The target price of any particular company. The price at which it is going to trade in next 1 year down the line. You have done the calculation. You have derived the value. How do you present? The question is, how do you present? There are some structural way of preparing those reports. Okay, specifically, there are some structure. We will try to help you how you should write this kind of reports. Lot of technical words that needs to be used. How do you structure? Like first you should have some three legs will be there. Then after that detail legs you have to just elaborate. Then what are the numbers that you should mention in the reports? All those things we will try to teach you when you have to look at the equity research report writing. Equity research report writing can be a one pager, two pager. It can be a detailed like 15 pager, 20 pagers. So we have gone through with all those kind of reports. We will try to help you in understanding those reports. And how do you write also? Correct? Then, after you complete all your modules, we will try to conduct a mock interview. Why mock interview is important? Please understand that if anybody wants to start your career in specifically in this industry, that is in capital market, we generally call it as a capital market is a niche market. Okay, not everybody can understand the terminology what we generally use in the capital market, right? And when you are going to face interview on this kind of companies, they ask very technical questions to test your knowledge, right? So we will try to make you strong so that after completion of this course and when you're going to attend an interview, please understand that interview is the most important. How do you demonstrate yourself? Because you may not get the more opportunities. One, two, or three companies, max to max, you will get an opportunity. If you are not able to crack that 45 minutes of interview, the opportunity that you are going to lose is a setback to all of you. Okay, so we will understand, we will make you strong so that you try to use those kind of technical words in the interview that suffice the requirement of any company. Okay, so I have personally taken a lot of interviews when I was working with your Kopalamba. So that point in time, I'll just tell you which are the things that you have to keep it in mind when you have to face those interviews, right? And also preparation of your CVs. So when you have to prepare your CV, how should you structure your CV? How should you structure your CV? Professional CVs are different rather than the general CVs, what you generally try to look at it. Now, in this industry specifically, finance domain में the most important is your professional CV, right? Whether it's a horizontal or a vertical or a combination of horizontal or vertical, this is something which will try to help you so that you can prepare your CV accordingly, right? And finally, all this after that, we will have two levels of examination. Now, why these examinations are important? Because once we complete everything, we want to test you people that are you really ready to go to the market or not? Whatever the knowledge that has been shared to all of you, will you be able to create a detailed model to tell the valuation? This is something which we'll try to make in that level one and level two examination, right? So this is how we have kept the whole module, whole structure so that you can easily understand and you can come to a level where you will be confident that yes, now I am ready to get into the equity research industry or a capital market or into the hardcore finance, right? So this is something which we'll try to run through it, right? Now, from the career perspective, you may be wondering that if I complete this course and if I have that certificate, right, where I can go, which industry I can go. Now, all of you should know that the capital market is widely open market. It has a various segments. It has a various segments. What are those segments? You can go to the investment banking, you can go to the buy side companies, you can go to the sell side companies, you can go to the brokerage companies, you can go to the private equities, venture capital. So many verticals are there. Can you understand? So you have to first know that which are those companies where I can push my CV for an interview, right? Because opportunity once completing this financial modeling, you have a greater opportunity to get into this subsector segments where you can start your career, right? So if you are really keen on capital market, under capital market, as I've already explained, there are various verticals are there. Suppose you say that, sir, capital market, I'm not good at it. Let me get into the hardcore finance. That also is possible because in the hardcore financial also, finance may, people basically expect somebody who can do a proper MIS, who can do a analysis of the performance of the business. So if you are very strong in this area, you can also get into the hardcore finance of any company. Suppose you say that, sir, finance also, I am not so interested. Can you tell me some other options? Banks. Banks also you can go because these days, every bank, if you try to see, they have their mutual fund segments. They are doing trading these days, right? So every mutual fund companies under these banks also have a separate wing where we generally call it as a lot of analysts. Basically, they try to take it because they again have to do a performance measurement of the whatever the stocks that the company, the mutual fund has invested. So there also you have a option to get into and start your career, right? So there are numerous options that are available for all of you to get into this kind of companies only after you have a thorough understanding about this financial modeling and valuation. Correct? In the bottom, I written very clearly. If you don't know modeling, you remain only theoretical. But if you know modeling, you are resourceful, you have those technical knowledges, and you are easily employable. You are easily employable, right? So that is where you have to understand that if you want to start your career on this, specifically into the capital market or into the hardcore finance or into the banking sector, you should first possess it with minimum knowledge as a fresher or as an experience, right? So that at least you can get into these kind of companies. See, I'm just talking about the freshers, but I have seen in my last 8 years, because from 2015, I'm taking classes on the financial modeling and valuation. I have seen in my classes, there are people, those who are working professional, having 7 to 8 years of experience. They have joined my courses. You know why? Because they want to change their domain to get into the finance. When you are joining any company, after some point in time, when the company wants you to upgrade yourself, they try to expect you that you increase your knowledge, okay, increase your knowledge so that you can take up finance jobs. So in my classes, I have seen there are chartered accountants, those who have joined these courses. Why? Because chartered accountants, they want to understand how to do a valuation. In our stream, basically, we need to certify as a valuer. So if we have to certify as a valuer, I need to understand how to do valuation. For that also, I have seen so many chartered accountants who have joined and they have completed this course. Because during their profession, if they get some kind of assignment, they should be able to do the valuation. Correct? So it is not only the case that freshers, it is also good for those professionals, those who really want to get into from non-finance to finance. Okay, and somebody who is into the engineering domain wanted to get into the finance. For them also, this course is very, very useful. Understood? Hmm? Okay. Career opportunities in various fields. I have already explained to all of you. You can see that where you can see yourself after completion of this course. You can get into the equity research, you can get into the investment banking, or you can get into your private equity or venture capital. So these are all the areas where you can see yourself when you have completed this course and when you are going to attend any interviews, right? So career opportunities are definitely good. There is no doubt about it, because based on my experience, I see that if anybody who has this kind of technical knowledge, they can easily break through and get into this kind of companies, right? No question on that, right? So important thing is you people have to realize your priorities. Where do you want to see yourself? And you have to invest in your knowledge. You have to invest yourself in your experience so that at least you can be employable. If you hesitate to invest on your knowledge, then nobody can help you other than you. You have to decide where I want to see myself. Okay, there are various courses. Even I've seen there are a lot of people, those who have completed these courses. After this, they have joined various professional courses like CFA, risk management, right? CMA, all these courses they have joined and they have completed, and now they are well placed on various big four companies. Why? Because this course will help you, because CFA is a course which is primarily into the capital market and valuations. So if you've already gone through with this course, it is easy for you to understand those terminologies when you have to join in the CFA courses, right? So if you have to increase your knowledge or want to join any subsequent courses also, there also this course will help you to understand and clear those examination in an easy way. Understood? Hmm? Okay. After you complete your course, you will get a certificate, which is called as a certificate of participation, certifying that you have become a certified financial modeler, right? You can use this certificate before going to interview anywhere, and you can put your this credential in your resume also, that you have successfully completed this certificate as a financial modeler and valuation, right? So this is something which we will be giving to all of you once you complete your course, 3 months of course completely, right? Then after this session today, right, we are going to have one more webinar for the participants, those who are going to look at a actuarial valuation. Now, what is that actuarial? Anybody who understand what is actuary? No? Okay. Anybody who has a little knowledge about actuary, first they have to understand this. Actuary these days is gaining momentum like anything. There are hardly very few people know about this actuary course. Personally, I have seen one of my colleague daughter, she joined this actuary course. I think she completed 2 years in one of the premier institute in Mumbai. Then she got immediately placed in KPMG with an internship starting with 50,000 rupees. And now, after your 6 months of internship, they are absorbing that candidate. So actually, if you try to see, there are very few people, those who have knowledge about the actuary. So if you are wanted to understand what this actuary and how to write the actuary exam, you can please go ahead and join this seminar, which is going to conduct today only, which is timing is 3 p.m. to 5 p.m. And this seminar is going to be conducted by none other than one of the senior lady that is called Suti Gupta. She has already have 11 year of experience, right, into this actuary, and she is currently, I think, is a professor in the Amity University for the actuarial science, right? She is also a student and a member of the Institute of Actuaries in India, and she has written a lot of research papers and presented in the national and international forums, right? So if you really want to understand how this actuary is going to help you, how you can crack the actuary exams, please go and join this course. This will be very, very useful. This may change the way how you think it. And if you really want to keen on actuarial also, you can start on this, right? So this is more about the financial modeling course and the actuarial at last, which I have just talked about. Now I want to stop it here from now. Go back to all the participants. Okay, now Sudhanshu, I want all of the participants, if you can just unmute so that they can just see and they can raise their concerns if they have anything. Anybody who wants to ask anything about the financial management, whatever I have gone through with that, please open up and speak in this forum, because you are getting an opportunity to build your career. You should not be hesitating in understanding about this course and how it is going to be beneficial to you, so that you can start your professional career in future, right? Rakshita, I'm sure it is because I know Rakshita, she's from RV University. Rakshita, you had a lot of questions, if I remember. Rakshita, you can unmute yourself.
Good morning, sir.
Very good morning, Rakshita.
Uh,
So tell me how this is going to help you.
so actually, I'm interested in financial modeling course as it will build some hard skills in the finance. Though we
Hmm.
have a theoretical MBA degree, financial modeling can help us gain knowledge like hard skills, job opportunities. So I just wanted to ask you that what are the placement opportunities from your side after this course?
See, Rakshita, we have a lot of people in various like big fours and all the investment equity research companies and all. So once you complete this course, we will try to push like the CVs like yours one to all these companies. Okay, so that at least you should be able to crack those interviews.
Okay, sir.
Correct. And I am looking more, Rakshita, that you should upgrade yourself. Don't restrict yourself to MBA, because I've already discussed with you. If you
Yes.
want to get some kind of professional degree, this is the time where you should work towards it. Because 1 to 2 years, if you clear your level 1 or level 2, you should find yourself all these companies like KPMG, Goldman Sachs. You can easily get
Yes.
it there. Okay? So just
Yes.
focus on your future. You strengthen your like CV so that you can be easily placed anywhere.
Okay, sir.
Okay,
Yes.
fine. Yes. Anybody else who have any other question?
Rezi, I'd like to request you to can you show some example in Excel sheet so that they can
Uh,
be, if
yes,
possible.
yes. Why not?
Mm,
A couple of financial models, you mean to
yeah,
say?
yeah.
Okay, give me a moment.
Any other participants who want to ask any question? Anything related to course or the career opportunity? Anything? Don't hesitate.
I think most of the people have concern on what after completing this course, job opportunities, correct?
Yeah,
So let me just
major
share one of
concern is
the
that only.
model. Can all of you see this Excel file, which is a very detailed one?
Yeah,
Consumer model. Okay. So this is one of the model that we will be going, we'll taking through with all the participants. This is a consumer company where we basically try to build up how to set up their revenue forecast. If you can see that, as I told you in the assumption sheet, we have to first forecast how to set up their revenue. So this company is basically into manufacturing of soap, hair color, and detergent, and they have given their price per quantity and what is the quantity. Using that, how have we forecasted? The yellow lines is nothing but your forecasted numbers. If you see here, okay, these are all basically forecasted number. So how do you set up the revenue forecasting? When you go to the cost side, you can see that there are a lot of cost items are there. So how do we set up the forecasting for each and every line item of my cost, right? Then all other fixed overhead expenses. This is how basically we try to structure it. Then, as I told you that when we have to prepare the forecasting, we have to have a separate calculation or schedule for depreciation. You can see that there is a sheet called asset schedule where we have all the list of fixed assets, right? Historical numbers, forecasted numbers. So P is nothing but your forecasted numbers. So forecasted mein, how have we done the closing balance of each and every fixed asset items, including the depreciation calculation. If you see here in the down, we have done the depreciation calculation under straight line methodology, under written down methodology, right? So these are something which will be telling to all of you how and you have to prepare the financial model. Then, as I've already explained that we have to do a proper forecasting of working capital items. So we have done here forecasting of my working capital items and also my long-term loan, secure loan, unsecured loan, right? Then there is a bank guarantee. Okay, how do we calculate the bank guarantee, right? So likewise, we have this separate sheet. Then we have a separate sheet how to set up the forecast for your equity capital, paid up capital, right? And then you have a separate sheet called your cash flow statement where we try to run through how to calculate your cash flow statement, right? As I've already mentioned that cash flow statement, we don't use any assumptions. We basically try to derive from P&L and balance sheet, right? So we will try to help you in doing this forecasted cash flow statement, which is deriving from your P&L and balance sheet. And then finally, we are getting into the valuation. So when I'm getting into the valuation, you can see that DCF valuation that has been used here and various parameters, which I told you, know, risk-free rate of return, what is beta, what is the market rate of return, cost of equity, cost of debt. So likewise, you will be able to calculate what is your weighted average cost of capital. Using that, we try to discount my future cash flow to derive at the present value of future cash flow. And using this, we basically try to derive what should be the value under discounted cash flow methodology. Okay. Similarly, for relative valuation. Relative valuation also, when you have to do it, how do you start it? That's approach, step-by-step approach. We will try to make you understand that how to do it. Okay. So this is the model which is basically talks about the manufacturing company. right? Now, if you want to see any IT company, right? So that also I'll just try to show you one of the model which I have it, hmm, which is basically Accenture case study. Yes. I will show you once again one more Accenture one, right? In this Accenture, if you try to see, the profit and loss account of this is totally different with the P&L which we saw just now, right? So here also, if you just try to see, I will just take you through the profit and loss account, how the profit and loss account of this IT company is basically how it looks like, right? The historical number, the forecasted number, how the forecasting has been done with balance sheet, forecasted number, your cash flow statement, your revenue build-up. The most important thing in the profit and loss account here is I wanted to show how to calculate minority interest. I have already explained no, that this is a case of company where Accenture has lot of subsidiaries across globe. So as a parent company, they have to consolidate the financial of all those subsidiaries. So when they do that, and in any of the subsidiary where they do not have a control of 100%, that means suppose the control is 90%, then for the 10%, we have to calculate minority. How do you calculate that minority? We'll try to tell you. Then in the balance sheet also, when you go, as I told you, whenever there is a consolidation financial statement, you will see that goodwill. You can see here, goodwill is there, right? How this goodwill is calculated, that also will try to tell you. Then how to set up the forecast, revenue build-up sheet. You can see that this sheet called as a revenue build-up sheet where all their segments are basically divided into various parts and we have tried to do the forecasting of my revenue items, right? Similarly, interest, how to calculate interest. Then you have again have a fixed asset schedule where basically we're trying to calculate what should be the closing balance of fixed asset of each and every line item, including the depreciation, right? Then ratios. Important part, as I told you, ratios are required for each of these financial model to measure the performance. So there is a ratio sheet where you can see that all those growth rates, then CAGR growth rate, then you have your cost as a percentage of sales, liquidity ratio, return ratios, so leverage ratios. So everything is been calculated in this model so that you can present it. Then finally, your DC evaluation. Okay, DC evaluation, this one is little bit different than what you are looking at a consumer model, right? So that also we'll just try to explain you when we are going through with this. And then finally, you have a relative valuation methodology. Okay, relative valuation methodology. So under relative valuation methodology, again, we have used various parameters. You can see that if you have to try to see here, I've used price to earnings multiple, I've used price to book value, price to EBIT, right? So different multiples has been used to calculate what should be the value under each of those multiples, right? So this is how basically you try to see all those models which have this kind of structure, right? Every company, if it's a buy side or a sell side, when you try to look at their models, no, it will be structured in the way how I have shown here, right? For revenue, there will be a separate sheet. For cost assumption, there will be a separate sheet. For the detailed financial statement, there will be a separate sheet. For ratio, separate. And finally, valuation. Okay. So we will just try to help you to connect each of these sheets to derive how you should get the value, right? In addition to that, if you also want to see a couple of valuation reports, because as I told you, during the course of my profession, I issue a lot of valuation reports also, right? So if you want to see when I have to prepare a valuation of any like startup companies and all, how do I do the valuation? If you want to see that one, that also I'll just try to show you how it looks like so that at least you understand that, right? So give me a moment. I'll just try to show one of the valuation report. In the meantime, if anybody has any query or question, please ask now itself. Okay. Yes. Now I'll just share you and try to show one of the valuation report that has been prepared by me. Okay, you can see this visible to all of you. So this is one of the company which is based out in India, which has been valuation report has been prepared, right? So the structure of this valuation report, if you try to see here, we will be just talking about what is the purpose of valuation, why are we doing the valuation, what is the requirement here, okay, the source of information, what data has been considered for the purpose of making this valuation. You can see that here somewhere I will be talking about the forecasted numbers. One second, segment and usage. You see here, what are the methodologies which I was talking about now? So there are different methodologies which we try to apply whenever you have to do the fair market value of any particular company, capitalization of earnings method, asset-based valuation method, market price, which is nothing but the relative valuation method, and comparable companies methodology. You have a discounted cash flow methodology. Okay. So these kind of methodologies that we are going to teach you when we are going to start with this session on the valuation portion specifically. And then we try to explain each and every methodology, what this methodology talks about, and where you can use this methodology in order to derive the value. Okay. So here, if you just try to see, I've just talked about all those methodologies. And finally, I have mentioned here what methodology I have used for this company to do the valuation. Now, surprisingly, if you try to see in this case study, right, free cash flow of this particular company for all the forecasting year are negative. The free cash flow to enterprise for all the forecasting period is negative. So when the free cash flow itself is negative, you cannot apply discounted cash flow methodology. Because when the cash flow itself is negative, how will you derive value? Value will be zero only, right? So does that mean that company does not have a value? Companies still have valuation, right? So what methodology? Then may use comparable company methodology. Under this methodology, the valuation is derived using the sectoral average of the competitor companies operating in India. And which multiple I use? EV to sales. You can see that EV to sales has been used to derive. This is a company which is into the manufacture of pallets. You know what is pallet? Pallet is basically packaging containers, right? Pallets are nothing but a packaging container which has been used for manufacturing this company. So I have taken few companies, those who are into the similar business industry, and try to derive what is their value. So I have mentioned here for 2025, the Indian logistics sector has a EV to sales multiple of somewhere around in range from 2.2x to 2.6x, right? And using this, I have derived what is the value. You can see that I have also taken the information. What is the multiple in large cap companies, mid cap companies, small cap company? Why I need this? Because the valuation which I'm doing for this company is a small cap company. So I cannot apply large cap multiples on the small companies, right? So I have to always consider small cap companies. What is the industry standard for this EV to sales, which 2.5 to 3x, which they have mentioned, that I have considered. And now you can look at here. This is the most important part of your valuation. What they have mentioned, financials of pallet exchange for 25-26 estimated data. Revenue is 20.91 crores. EV to sales average 2.6. I have considered 2.6. So it is 2.5 to 3. I have considered 2.6. There also, if you see discount due to size, this is an additional adjustment. This is an additional adjustment to the multiple. So I have discounted further 90%. And then I have considered 10% of this 2.6 into 20.91 crore to get a valuation of only 5.4 crores. Right? 5.4 crores. And using this, I have tried to derive the value of the business. Right? So these are those technicalities which we will try to learn when you are going through the valuation methodologies. So all these case studies, I will try to present before all of you participants so that you understand that under each of the scenario, can I apply this valuation methodology? If DCF is not allowing me to derive the value, how should I go and use any other alternative methodology to derive the value? Right? So this is how basically we try to do evaluations and try to derive what is the market value of the business. Okay, understand? So this is how we have to do it. So all these case studies will be shared to all of you when we are starting with these courses. Okay. So you just have to be patient and just go with the pace at which we are going on a module wise so that we can reach to the end point. Got it? Okay, so anything else you want to add, Sudhanshu? I have shown a couple of live case studies to them so that they can understand what is the significant essence of this. Okay, so basis which we'll try to soothe there. Any other questions?
No.
No question answer. I'm wondering, all the participants.
Saurabh, do you have any question?
Hello, sir. Sir, I
Yes,
am
Saurabh.
Saurabh. Sir, my
Yes.
question is, in while doing this course, what common mistake as a beginner candidates do? How can we avoid them?
See, the common mistakes basically sort of happens only when you do not have the clear concept of how to make the financial model. Correct. No, for example, recently I asked one person, what do you mean by enterprise value? In the financial model, enterprise value is the most important fundamental concept. Correct. No. So they were not able to like explain what exactly is enterprise value and how it is being computed. So that is where I'm trying to tell you that we will try to make you understand all those technical jargons, okay, the technical meaning of it, so that when somebody asks that question, you should be able to answer it fundamentally.
Okay, sir.
Because
And
when
sir,
I told you, sort of very important thing is that interview, that 30 or 45 minutes of interview, how do you demonstrate? How do you sell yourself? Right? So that is where you will draw a line between an average candidate, between a person who is a knowledgeable and resourceful. And that's the reason at the end, I have kept one mock interview only for that reason. Understood?
noted, sir.
So that, yeah,
Sir, does this course require any internship also?
No, no, no. It's
no,
not.
there is no internship. This is a
So
certificate, just like any other kind of certificate when you just try to
it's a
achieve it. This is
certificate.
a certificate only, kind of a accreditation which you basically use it when you are going to attend interview of any company.
Okay, sir. Thank you.
Okay, okay.
Mr.
Yeah,
Jatin,
yeah, Jatin.
Yes, sir.
Yes, Jatin. What you're doing MBA or how's that?
Sir, right now I'm pursuing Masters in Actuarial Science.
Oh, great. You have already into the actual science, so you understand how actual science basically works, right?
Yes, sir.
Good, good to know about this.
we have another session in the second half, 3 to 5.
I've already explained that,
Actually,
so
sir,
that
he's my student. I have taught him MSc Actuarial Science.
oh, great, great. Good
Hello,
to know
Jatin.
this.
Hello, ma'am.
Great.
Okay, good, good. So,
Mr. Gagan, if you have any question. Mr. Gagan Raj.
Kshitiz,
No questions.
you are from which location? Kshitiz, are you location?
Kshitij Kumar Singh.
Sir, from Delhi.
Okay, from Delhi. Right.
What
And
you are
what are you
doing?
doing, Kshitiz?
Sir, pursuing MBA from
Pursuing final year or?
business analytics.
Acha,
The dual
okay.
specialization, finance and business analytics.
Sorry, not clear. Can you just repeat once again?
Sir, I'm pursuing MBA and doing
Okay,
dual specialization, finance and business analytics.
okay, okay. Financial business analysis. So I think this course then will be useful for you because financial analysis is something which is very important part of this financial model. Correct?
Yes, sir.
So you can explore this. How about Manas? Manas, which location you are from?
You are on mute, Manas.
You have unmuted to all, no? Sudhanshu?
I have unmuted all of them.
Ha. Manas, can you please unmute yourself?
I don't think so either.
Okay, fine. Fine. I think, Sudhanshu, you can take it over from me now. Okay, so
Yeah.
just to talk about the course details to all of the participants so that they can understand. Hmm?
Yeah. Thank you, Mr. Naresh.
Okay,
It was
so
really a
thanks from my side. Okay, so if you have any
Thank you, sir.
question about the course, about the course fees and all, you can just have a discussion with Sudhanshu now itself. Okay,
Thank you, Mr. Naresh.
thank you.
Yes, sir. Thank you, sir.
Thanks to all the participants.
Thank you, sir.
Thank you, sir.
Thank
So
you. Thank you.
we'll be having a weekend session since all of you are studying. So we are starting financial modeling and valuation session from 26th of April. It will be a weekend session, Saturday and Sunday, 3 hours per day, and it will be a 12 weekend, around 40 hours of session,
Okay, sir.
right? And it will be online, totally online, through Zoom only. Mr. Rahul, you have any question?
No, sir.
Okay. What you are pursuing, Raju? Rahul?
Sir, I am currently pursuing PGDM.
PGDM from
Yes,
which
sir.
college?
Sir, I am a business school.
IMM Business School, Delhi.
Yes, sir.
Okay. In which PGDM and which stream?
Like in dual specialization of finance and business services.
Oh, finance and business. Okay. So, do you have any queries from anyone? You can visit our website, that is www.edudesk, that is EDWDESK, edudesk.com. All courses details are over there, and we have some module courses like soft skill, how to build a resume, time management. These are the short courses you can explore over there. And if you have any queries related to any course or career counseling, you can connect with us with our mobile number is 8595 334710, and the email ID is support@edudesk.com. So thank you everyone.
Thank you, sir.
Thank you. We have second session, afternoon session, that is 3 to 5 for actuarial exam strategy. Those who are interested can join. Thank you everyone.
Sudhanshu ji.
हाँ नरेश में
So I think you better share all the course fees details and all to in the webinar
हाँ
group itself. Huh? Okay, so because by the time we finish, I think a lot of people exited.
हाँ वो एग्जिट का हो गया इसलिए एक दो क्वेरीज आया था आई कनेक्ट विद देम डायरेक्ट पर्सनली
हाँ तो उसी में डाल दीजिए just put it in that webinar only so that those who wants to understand let them understand right how is the course everything and then you
मैंने
try
मैंने
to reach.
बता दिया है कोर्स फी अभी नहीं डाला है लेट मी टॉक टू
Hmm.
देम एंड देन आई विल डिस्कस
Okay, fine.
ठीक है
Okay,
ओके
चलिए, thank you,
थैंक
thank you. Hmm.